As we speak now, quite a number of companies are approaching the market with one primary market instrument or the other. Why? There would always be need for quoted companies, all right? But how do you pick the best of the best? You see, in this market, if you look at those that had lost money than the others, there were those that approached the market without necessarily knowing what they were doing, particularly when between 2005 2006, Professor Soludo sent those financial institutions to the market to shore up their shareholders fund. Instead of them merging, instead of them relinquishing their licenses, they decided to enter into the market and see what they can do. So they pushed their suffers to the market all over the places, public offering here, public offering there. Of course, there were other industries too that later joined, but many people did not bother to do analysis. They were not connected with the sources of knowledge and information, and so subsequently, because of one strategy or one form of marketing strategy or the other, they invested, and today they are net losers. Those are those that will say, because they have lost money in the market before, they are never going to come near the market anymore. But the truth of the matter is that, well, maybe once in a while, you have been involved in maybe you have been involved in an accident. Will you say because of that, you are not going to travel in a vehicle before anymore? And so because of that, you are going to trek all over from Lagos to Ibadan to Ilorin to everywhere on foot. Even there are people that still trek on foot, and maybe they hit their legs and something happened to them. So what I intend to do in a few minutes, all right, is to take you through the strategy to adopt if you want to consider any primary market issue as we speak. So I go straight to primary market activities. Should you invest? Should you not invest? What are the critical factors to consider? Number one is take your time, check the precedents of those organizations that will be approaching you for primary market issue. What are you to check in their precedents? What industry are they operating in? What is the viability of that industry? What is the value that might be inherent in that industry? Number two, look at the products. Do you know products of that organization? How potent, how marketable, how popular? Very important. Check their management. Since they came in, how well have they been able to manage the organization? What is the profit margin? That is the relationship between turnover and profit after tax of that organization. Who are the people that constitute their board? Not that alone. In their precedents, you need to look at what their earnings performances had been. If you do not know, please ask. Until you are able to see growth consistently over a period of 5 years in some of these organizations, growth that you are sure of, please keep your money. Not that alone. How well have they been able to sustain their price? Even in this bad market, when we see declining prices of equities, how well has such equity been able to sustain a good price level? Look at the year to date. Look at the quarter to date. If the price is declining, please be careful. Look at the shareholding structure. Very important. When we meet at a workshop, I will be deliberating more on this, but I'm not done yet. You go straight to look at, again, their shares in issue. Now, that will be shown on the screen in a jiffy. Shares in issue, very important. You need to know how this affects the prices of equity, the price performances of equity. When the outstanding shares of a company is very huge, the ability of that organization to give you dividend that will be commensurate with price slows down. That is the reality. And that is why you see most of our financial institutions these days have not been able to give bonus issue. Why? Because that is where you see 38 billion ordinary shares. You see 25 billion ordinary shares. Why? Outstanding number of shares have become so huge. And then what is the relationship between the existing shares of the company and the quantity of shares being issued for you to buy in their primary market activity? So you need to now add that to the existing. You will now see what the new outstanding number of shares of that organization is going to look like. Then thereafter, you have to juxtapose this with the expected earnings. Expected income, as in profit after tax. You must be able to forecast the earnings, not the earnings that the organization is forecasting in their books, but your own earnings that you should be able to forecast. There is no organization that is hitting the market with a primary market activity that is going to forecast lower than expected earnings. All of them will bring all these things together, but it becomes your responsibility to make your forecast. What you don't know, please ask the question and then be rightly guided. The stock exchange is not the one that will tell you, or the SEC, they are not the one. They are people like the Oracle. So when the Oracle is talking, please endeavor to listen. Not that alone, you will now have to relate the primary market activities, particularly the price at which it is being offered, with what obtains on the floor of the Nigerian Stock Exchange, knowing fully well that the price is not going to be placed on technical suspension. As soon as the ride is over, what do you think will happen to the price of such equity on the floor of the Nigerian Stock Exchange? These are critical factors. Thereafter, you now come to the price proper. Very important, which is the next slide you are going to be seeing now. What do I mean by prices? Very important, you consider this. Now, prices, please, the next slide, which is prices. Now, you talk about current market price, very important. Then you look at the primary market price, very important. Look at the variance between the current market price and the primary market price. Then look at the previous price performances, and then you ask yourself, where was the price coming from? Where is the price likely to go? Then what will you be doing? Should the price come below? Listen to me. And that is what the Oracle is saying this afternoon. Any stock that you know that if the price should come down below its current price, or the price at which they are selling the primary market issue, if you are not sure you will be buying more, leave the primary market issue. Just focus your attentions on the secondary market. We have seen institutions, I think on Saturday, we were talking about, if I'm not mistaken, was it Lafarge WAPCO, how much they came to the market to do primary market activity, and how much the price is currently selling on the floor of the Nigerian Stock Exchange. You will discover that it will have been better for you to have just retained the price on the floor of the stock exchange than you going to buy the primary market issue. Then let me show you this one before we round off this segment. Now, what is the purpose of the offer, which is the next slide you are going to be seeing now? What is the purpose of the primary market activity? Now, there could be different reasons. One, it could be for working capital. The intent to beef up their working capital. It could be for assets acquisition. It could be for debt refinancing and all the rest. But the one that is the best for you will be those that are actually coming to the market. The assets are there, but they want to shore up their working capital. Not that they are buying anything, but they want to ensure that there is enough funds to operate. That is how best to invest in primary market activity. If you do this, you are bound not to lose money. You are bound to make money. Now we look at earnings that have been released to the market. So far, so good. This earnings season. Earnings seasons are always the hottest period, the most active period in the market anywhere in the world. So now I